Well, welcome everyone to our 1099 webinar. We're excited to be here on a cold, at least here in Central Texas, cold winter night, one of our 3 days of winter here in Texas. And probably if you're here, like us, you've been working collecting W-9s because you're prepping to file 1099s. And so we hope that this really can be a tool for you, a resource for you to help equip you as you're doing that work, as you're working with your CPA, or maybe you are a CPA joining with us. And so hopefully that'll be helpful. And just to let you know how this is going to go, Chris is going to lead us in a time of teaching for 15 or so minutes, and then we'll pause, have some Q&A. There's a couple ways you can ask questions. One is you can hit the Q&A button and submit a question, and then when we get to Q&A time, we'll answer those. The other way is going to be if we're in Q&A and you think of something at that time and you don't want to type it in the Q&A, you can just hit the raise your hand button and we can have you chime in on the audio. So that's pretty much the laydown. We'll go for roughly an hour. If you need to leave at any time, obviously you can do that. If we end up going over, we'll record it and send that out within the next week. So hopefully it's helpful. We hope it's helpful, and we're learning kind of as we go to how we do these things. And anyway, so I actually want to begin our time with prayer, and then Chris will take it over from there. So let me pray, and we'll get going. Father, thank you for these people who've joined with us, and thank you for the task of financial stewardship. Lord, it's such an important part of how we are faithful to you. And so tonight, as we talk about not always the most exciting topic of 1099s, would you just help give us wisdom? Would you help Chris to teach with clarity? Would you help those who are wrestling with different tasks around 1099s to just have wisdom for their daily tasks that they're facing, Lord? Thank you for this time. In Jesus' name we pray. Amen.
Amen. Amen. Can you still hear me okay? See me and hear me okay? Audio coming through? Great. Well, as Josh said, we are excited that you are here for our first ever live webinar that ChurchBiz has put on. I don't think you could see it from his camera view, but Josh is actually repping ChurchBiz tonight with a ChurchBiz polo. You can maybe be able to see it there a little bit. I am cold. It is cold today in Texas. Wherever you watch it from, it's probably cold where you are. I saw a graphic that it was actually colder in Texas than most parts of Alaska yesterday. So that's a little unusual for us. We had a late start for school. I have two girls that are school age. So we're like right in the middle of winter, cold season, 1099 season. So this is just kind of the time of year where it makes sense to do this kind of a webinar. And so I assume if you are taking time out of your evening to be a part of this, or if you are watching this on demand at a later date, that you are someone who is charged with leading a church finance team, or part of a church finance team, or part of a church staff, or a Christian ministry, and you are wanting to increase your knowledge around this topic. And so I commend you on that. We're going to really tonight break it down into two main topics, really looking at 1099s from a broad view down to kind of a detailed view. And then after we tackle that, we'll stop, see if any questions have come in, or if there's any questions you want to ask here on the live webinar. And then the second half of this is we'll just talk about contractors versus employees. What distinguish and differentiates those two groups, and how a church or ministry should think about those things. So we've planned this for an hour. We will see how it goes. We'll definitely do our best to work within those time frames. We're doing this from our home office. I hope that my dog won't bark at the FedEx truck, or I don't think my kids will come in and interrupt. But if that happens, we'll just roll with it. And that's, really kind of speaks to who we are as a company. We're not here to try to impress you with all the bells and whistles, though we certainly want to impart knowledge, the things that we have learned over the years, and then be here to answer questions and be a resource to you. And hopefully, even though it can be a little bit of a more dry topic, have a little fun along the way this evening. So just quickly, a little bit about me, a little bit about us as a company. I'm a CPA. I'm not a professional speaker, but have been practicing this field long enough, all of us here on this call, that feel like it's worth your time investment to put this on and to put this out there in our learning management system. I've led church finance teams, one of the partners at ChurchBiz for the last several years. Josh, Kevin, myself, Brandy, our whole team, like we're not aiming to be the so-called thought leaders in this space that uh, would just go around consulting on this all the time. We are intentionally practitioners too. I think for as long as we're doing this work, that we're always going to be rolling up our sleeves with you, doing this work with you. And to whatever level God grows Church Biz, I feel strongly that we'll be working in this alongside you. We are literally right now trying to meet 1099 deadlines, doing 1099 deadlines. So we're not just teaching on it, we're working in it. And so that's kind of our heart, is just to be resourcing you as we're practicing it, as we are doing it. So quickly talking about my background, I grew up in Southwest Missouri, son of a minister. When I was in third grade, my dad, he left pastoring a local church. He started a ministry called Concepts and Stewardship. And so he traveled all over the country teaching and training pastors and local church bodies on biblical financial principles. And I got to travel with him a good bit over the years. And what that would typically look like is on a Sunday, he would go in and teach and preach on a Sunday morning and a Sunday evening, traditional church services. And then Monday through Wednesday would do all kinds of trainings, anything from how to put together a resume for people trying to find jobs, to best practices for family budgets, to training pastors on how to teach their congregations on giving and stewardship. So this stuff's in my blood. I've been around it my whole life, and went to college, got my undergrad in accounting, 2005. After that, got my MBA, then my CPA. After I graduated college, went to came down to Austin to help plant a church. The church I helped plant, the pastor's wife was actually she had served for a large denomination. She was a CPA and had served as the internal auditor. So she would go around and work with all their churches, helping them set up internal controls. From her was just incredible experience early in my career, learning about internal controls, nonprofit, fund accounting. Got to lead that church finance team with her guidance and support. Was a really great experience. And helping plant that church, was working jobs to support myself and support that church. Started in a small public accounting firm, and just from there, just continued working private industry accounting jobs. The last job I was at before Church Biz was I was working as a divisional controller for a subsidiary owned by a publicly traded company in the technology space. Left there, came to Church Biz in 2020. Kevin, myself, who are the owner operators of Church Biz, both CPAs who spent about 15 years in roles that I feel really prepared us well for what we're doing today. Kevin has a more extensive background in audit and tax work, whereas I spent more time financial management, accounting as controller, as I mentioned, similar roles. Josh quickly mentioned he was the founding pastor of the church where we attend and serve. I currently serve as an elder. Josh and I are both elders. Kevin's on the finance team. Kevin started the finance team, and now I get to lead the finance team. He's a part of it. Josh brings a really valuable perspective to the work that we do as a founding pastor who is very gifted administratively. He set up our chart of accounts. Josh actually knew about Church Biz before Kevin and I did, probably back, I don't know, 2015, 2016, found Church Biz to help do payroll when in the early days of Redeemer, and has joined our team, still serving as an elder and just doing a great job with social media, website, the content work we're doing, things like tonight, on top of just helping take care of churches and the clients that we work with. And just quickly, I'll say before we actually jump into 1099s, which is why you are here tonight, just again want to commend you that if you're taking time to delve into these topics, that understanding and leading a church or supporting and serving a church through finance and back office is a weighty task. And those who are charged with leading and serving a church, it's not something to take lightly. And too often you see those that want to just not take that responsibility seriously, or pass, oh, my bookkeeper can take care of that. But if you're here, you're actually wanting to understand this, and you want to know where you need to lead and know where you can empower others in their areas of gifting. Maybe you're in a support role and you can approach your leaders with knowledge that they're maybe lacking around this topic, or maybe you are a leader and you need to know how to best help your back office team. So again, just kudos to you if you're here tonight learning about 1099s. I truly believe that this stuff actually matters. Just like there's thankless tasks like changing a diaper on a Sunday morning in the nursery. It rarely gets recognition. There's ministry in running and leading an efficient back office so that the ministry of the church is unhindered and unburdened from the unnecessary stuff, and you're not dealing with frustrated contractors or IRS asking for documents or backup withholdings. There is value here in the work that we are doing. So with that intro, let's jump into 1099s. For the remainder of our time, I'm going to walk through some content, some slides. Josh, do you happen to have that slide deck we could throw up as we get rolling? We should have that up hopefully here any minute, and I'll kind of give you a visual as we're going through it. And let me see. That actually took up my whole screen. How can I get out of that so I can see my notes? There we go. Okay, perfect. All right. So again, I'm going to assume I'm speaking to an audience here that is working with churches, Christian nonprofits. If you run a business, a lot of this will apply to you. Some of it won't. And again, Q&A, we should have Q&A turned on. If this sparks a question, find the Q&A, throw it out there, and we'll either answer it. Kevin and Josh may answer it as we go, or we can pause and have a time for questions halfway through and then at the end. And Kevin or Josh, if I miss something or you have some additional details, cut me off and say something. And so we make sure we get everything we need to on this topic. So let's start at the top with the basics. What is a 1099? A 1099 is a document to report income to the IRS, the Internal Revenue Service. A 1099 reports income that is not associated with an employee. Employee wages are reported on a W-2 form. I'm sure most of you are aware of that, have received W-2 forms, understand what that is, but we're starting at the basics. Non-employee income and other forms of income are reported on a 1099. So it's not for corporations. Corporations file a Form 1120 if they're a large corporation. If they are a small corporation, they file what's called an 1120S for a subchapter S, meaning they have 100 or less shareholders on a very broad view. So corporations don't need 1099s. Employees don't need 1099s. 1099s are for non-employee income, for non-employees, think contractors that provide services to your church or ministries. So we're talking about sole proprietors, just individuals running their own sole proprietor business, or what would be called a single member LLC, which is very similar to sole proprietor, a partnership. It could also be there's LLC classification as a partnership. We'll get into that specifically. We're going to look at the actual W-9 form here in just a minute. But those non-corporations that are performing services for your church that provide services greater than $600 during a calendar year need a 1099 form from you. The deadline to file 1099 forms for 2023 is January 31, 2024. If you have not started the process, you have 15 days and you need to get rolling. You need to get on it. It's coming quickly. Something that is new for the 2023 filing year is a requirement that any entity issuing 10 or more 1099s must file electronically with the IRS. So in prior years, you had the option to file paper returns, or you could file electronically regardless of the volume that you were filing. This year, 10 or more, like I said, you have to actually file electronically. Now, I don't see this as a big deal because most software tools go ahead and take care of filing electronically for you. Just something to be aware of. IRS actually has their own tool through their site called IRIS, IRIS filing system, where you can do that. If for some reason your software doesn't allow you to do that. I actually have one client that uses ADP for payroll, which is not the common system that we typically work with. Their level of ADP doesn't file electronically, so for them, I have to go to the IRS site and do that. So just kind of a FYI. Then that last bullet point there on that slide, when you file a 1099, the IRS gets a copy, the recipient gets a copy, the state of that the recipient lives and works in gets a copy, and the employer, which would be you, the church, can keeps a copy. Go on to the next slide. There are different types of 1099s. There are two primary types of 1099s that a church or ministry will file. The vast majority of the time, you're going to file a 1099 NEC. NEC stands for non-employee compensation. That's what we were talking about. That's why you're usually filing a 1099, is because someone who is not an employee of your organization has provided you service. So you have to provide them with a document showing that they have taxable income that they need to report. So could be any number of examples. A common one that we see is you hire a graphic designer. They run their own graphic design firm, or perhaps you are looking to do a building project for your church. You hire an architect firm that is working with you on an upcoming building project. Maybe they're set up as a partnership, or you have a cleaning crew that comes, cleans your building once a week. And there's a member of your church that runs that cleaning crew. They're set up as a single member LLC. All of those examples, if they provide more than $600 of service that year, they need a 1099. They need specifically a 1099 NEC, non-employee compensation. Why do they need that? Just like your employer has to tell the IRS wages they paid you as an employee, you have to tell the IRS income that you paid out in non-employee compensation. And one thing that can often get overlooked related to 1099s is yes, the contractor has obligation to report that income, but you as the payor, you as the employer of that contractor also have obligation to get their information and to report to them their taxable income as well. So that is an obligation that you do have to take seriously and make sure that you are fulfilling your obligation in a timely manner so that you don't subject your church to potential penalties and backup withholding requirements that we'll look at here shortly. So here's something, if I would say the number one key takeaway from this whole first section, that you as a church finance team member or a back office or staff pastor to implement, if you are not already doing this, the key takeaway for your processes of paying vendors and contractors would be to always require a W-9 on file before you pay a new vendor the very first time. Just make that a standard practice. In my prior work life, something always did. This is a very common business practice. And if you don't do it, it's okay. If you had never heard of it, that's okay. You've heard of it now, and now you have the opportunity to implement that. It's you kind of have that carrot, so to speak, to say, hey, we want to pay you, but our church's policy is we need your W-9 on file before we can issue you payment. That protects you so that you have that information, and then you can go ahead and set that vendor up in your system. And we're going to look at that W-9 in just a minute, see what all information that W-9 has, but that's going to tell you their official business name. It's going to tell you their address if you're cutting them a check. It's also going to tell you their tax classification, or if they're an exempt organization. And so you can just get in the practice of getting that information right up front, putting that in your accounting system. And so right at the outset, when you start working with this contractor, you know their status. So you're not chasing it down at the end of the year. Hopefully you're not chasing it down on January 16th, trying to get your 1099s out the door. Sometimes that's going to happen. And we can talk about that and talk about how you try to mitigate that and mitigate some of your risks. But as a general rule, I would suggest get it right up front. And as a matter of fact, there's actually IRS guidance that ask employers to do just that when you start working with a new contractor, that you request that W-9. So let's actually, on that note, I think the next slide should actually be the W-9 form. I'm sorry, Josh, go back. If you would go back one, I want to make sure I'd hit all those bullet points. Yeah, we talked about that first one. Is you would require a W-9 form, review it as soon as it's received, to note in your accounting system if the contractor is 1099 eligible. Kind of briefly touched on this, but this is important. Keep copies of all W-9s on file in your records and records of requesting them. And then lastly, just so this doesn't feel as cumbersome, we're specifically talking about requesting a W-9, someone providing you services. I'm not talking about like you buy t-shirts or you order Chipotle for a lunch for staff or someone you're making benevolence payments to. I'm talking about someone providing services, someone providing non-employee compensation. So we can go ahead and flip on now to the next slide. We'll actually look at the W-9. It's pretty small there, at least in my view. I don't know how well y'all can see it. So I have a paper copy here. I'm going to look at kind of walk through the W-9. So box one is name. Box two is business name, if different. And then box three is key because this is federal tax classification. This is what determines if they get a 1099 or not. So on the left is individual, sole proprietor, or single member LLC. If this box is checked, they need a 1099. The next over, C corporation, they don't. They're incorporated, they don't need one. The next box, S corporation, don't need one. Partnership does need one. Trust or estate, that fifth box over, is kind of NA because trust or estates don't provide services to businesses typically. So I doubt you would really have to deal with that. Now, the next box down is limited liability company. This is a tricky one and causes lots of confusion because you'll ask the question, well, what type of entity are you? Well, we're an LLC. Yes, an LLC is a business entity, but it's not a tax classification. So the IRS does not recognize LLC as a tax filing classification. So if you are an LLC as a business, you have to have a separate tax filing classification. So you'll see in box 3, an LLC has to pick if they are taxed as a C corporation, an S corporation, or as a partnership. So just as in the boxes above, if the LLC is taxed as a corporation, they don't need a 1099. The LLC is taxed as an S corp, don't need a 1099. Taxed as a partnership, they do need a 1099. So if you ever get a response from a vendor, I don't need a 1099 because I'm an LLC, two things. One, say, well, go ahead and send me the W-9. It's just part of our standard procedure. We like to get a W-9 from all of our vendors just to have it on file. And two, the reason you want that is because even if they're LLC, depending on which box they checked for how they're taxed as an LLC, is actually what determines whether they get a 1099 or not. And again, if they're a partnership, then they will. If they're the other two classifications, they will not. So quick recap, it's individual single member LLCs, partnerships, and LLCs taxed as partnerships are the entities, the tax classifications that will get 1099s. Last thing from box 3 I will mention, that last checkbox underneath LLC says other. That's where an exempt entity would mark, like, check, I'm a 501c3 or I'm a 501c4 or 501c7, whatever different exempt statuses that could fall under that. Something to just keep in mind. I know I'm throwing a lot of information out there. There's a few things you need to remember around 1099s. If you are submitting a payment to a missions organization, an exempt missions organization, you don't have to give a 1099. If you are paying directly to a missionary, you do have to issue a 1099 because it's deemed taxable wages directly to a missionary, just like you gave an honorarium to someone coming to preach, someone coming to minister at your church. So that's a really key distinction, and you would even need to understand that to make sure that they're giving you that W-9 correctly. If that missions org or if that individual missionary is handing you a W-9. Also, benevolence payments, you do not need to issue a 1099 for benevolence payments. So make sure in your system that you can know what's benevolence, what's going to a missionary organization, what's going directly to a missionary, and so on. Now let's keep moving because we've got a lot to cover. The next slide is 1099Ks. Man, there's a lot there's a lot we could say here. A 1099K is a form issued from a third party payment processor. So debit card, credit card, there's so many of these nowadays, Venmo, Apple Pay, Cash App, Zelle, you name it. You know a ton of them. This sounds really strange, but if you make a payment outside of a check or an ACH, that doesn't count towards payments that you have to issue on your 1099 NEC. That's not part of what you're tracking on these 1099s that you have to issue. And that can make things really confusing. What's nice is QuickBooks is our standard accounting software that we use. QuickBooks is already going to pull those out at the end of the year, say, nope, you paid that by credit card, you paid that by Venmo, they're not going to count it. So whatever accounting software you're using, double check and make sure that it's not counting debit, credit, third-party payments in 1099s that you're tracking and paying for non-employee compensation. The reason that this is the case is because when those payments are occurring from a third party, the IRS looks at that as Venmo has paid that contractor, Visa has paid that contractor, not you. There's actually and then there's one step in between you and that person. That Venmo is actually fulfilling that payment, and so Venmo needs to send them that 1099K if they reach a certain threshold. So that can create a lot of confusion because if they hit that threshold where they get a 1099K from Venmo and you send them a 1099 NEC and both of those go to the IRS now and they aren't aware and you're not aware, they could actually double report and over report their taxable wages, and it's not correct. So that's this is something that can create a mess on both sides. The IRS has talked about phasing this down to they're going to phase it down to $600 a couple years ago, and they got so much pushback that they delayed it, and then they delayed it again. And as it stands right now, they're going to phase it down to $5,000 paid for services or sale of personal property will be issued a 1099K if it's paid through one of these methods on the slide for tax year 2024. As it stands for 2023, you will only get a 1099K if you have received payment from a third-party payment processor if you meet both criteria that it was more than $20,000 and 200 transactions. That's a pretty high bar for a church to reach. I'm trying to think of a scenario where you would pay a contractor via one of these methods more than $20,000 and more than 200 times. So this really becomes less of a 1099 issue and more of an internal controls issue. So I won't spend a ton of time on this. I would just say, just as a general something to think about is if you're going to use these other methods of payment, think about, does the ease of payment and not having to issue 1099s make it worth not going through the more traditional check request, cutting, and issuing payments? Do we have the right controls and approvals in place? Can we report on it correctly? Do we know we're paying the right person in Venmo? So you just have to weigh those things out, and then also just make sure that if you're paying in this way, don't put it on a 1099 NEC. So that's 1099K. And there was one other thing I wanted to touch on that. Yes, that next slide. Let's go there. There's one other 1099 form that a church could have to issue, and that's this form here on the slide, the 1099 miscellaneous form. And the 1099 miscellaneous used to also include uh, non-employee compensation. So it was pretty simple. You would use 1099 miscellaneous for everything. Now 1099 NEC is a separate form. 1099 miscellaneous now is primarily would be used by a church for box one rents. So your church, if you pay rent for something and you're not sure if your landlord is a partnership or single member LLC, you don't know what their tax classification is. And again, just as a general rule of thumb, you just want to get that W-9 period. So get a W-9 from your landlord, look at the tax classification. If it falls in one of those boxes we talked about just a minute ago that requires a 1099, then you will issue them a 1099 miscellaneous for rents. That's primarily what you're going to use a 1099 miscellaneous for. I can't think of other scenarios for church that I have encountered. Uh, fish purchase for resale, excess golden parachute payments, crop insurance proceeds. There's a lot of other miscellaneous things that typically don't apply. So, but also just be aware, there's a handful of 1099 miscellaneous I'll issue each year for rent payments as well. Let me hit a couple other things as it relates to 1099s, and then we'll stop and see if there's any questions that have come in. Couple common questions. What happens if you file late? That's a great question. So there is a penalty for late filing 1099s. So would not recommend doing that. There's I've put a table in this slide, so don't know how well you can see that, but for the year 2023, if you're up to 30 days late, it's $50 per form. It can go up to $290 per form. And then if the IRS were to deem that you intentionally disregarded not filing, you can go up to $580. Now, this is not crazy expensive money. I mean, it's going to buy you a few pair of Jordan tennis shoes for that amount of money, but you definitely don't want to let those things stack up on you, and you should want to pay $0 in late fees. What I would say is typically I haven't seen a lot of IRS coming after churches looking for late penalties and late filing fees. In my professional opinion, it's fairly low risk, but I'm also not going to sit here and say it would never happen. So I do feel a duty to share with you it can happen. I mean, it's in the IRS guidance that they have the ability to assess these late filing fees if you don't file a 1099 you're supposed to. So I think you just need to be aware and do the best of your ability to file every 1099 you can, which again goes back to get the W9s when you start working with a contractor and get them filed on time. Here's the penalties you would be looking at, the range of penalties you're looking at if you don't file them. That kind of leads into the next and last kind of big question around 1099s is we go to the next slide, Josh, is what happens if you can't get a W9 from a contractor? If you ever, the next snow day that happens in Texas or whatever part of the country you live in, looking for some light reading, you can go to IRS publication 1586, which is 31 pages on reasonable cause regulation and requirements for missing an incorrect name on tax ID numbers. Or you can go to IRS publication 1281, which is a light 80 pages for backup withholding for missing and incorrect names. And there's just a ton of guidance out there on this. And I'm not going to go way down in the weeds on this tonight. There's like There's like decision trees on if it's this many days and do this and this and this. Kind of reading all through that can just kind of make your head spin. I want to stay really high level and talk about best practices that minimize your risk and liability. We've touched on a lot of it already. Again, if you want to study more, go read that IRS guidance, and it can give you more than you would ever want to know about this stuff. I already stated my professional opinion that I think that the IRS is typically going to spend more time auditing the contractors for not reporting taxable income than the organizations. But again, the church can be assessed penalties if if you don't have a tax ID number from a contractor and you keep paying them. You may get a what's called a CP 2100 letter from the IRS saying that you now need to start withholding what's called backup withholding, and you now need to withhold 24% of each payment from that contractor and submit a quarterly form 945 to the IRS. These are things that can happen to you if you don't have that W-9 from the contractor. By the letter of the law, what the IRS asks you to do for each contractor relationship is to request the W-9 when you start working with them. If you don't get it, the IRS wants to show that you have worked in a responsible and reasonable manner and requested the W-9 by the end of each calendar year that you work with that contractor. So again, we've talked about best practice. Ask it when you start working with it. I would for sure ask at the end of that year when you're going to file 1099s. If you don't have it, I would just stop working with that contractor. If you can't get a W-9 by the end of that whole year you've been working with them, then you just need to stop, because you don't need to subject your church to potential late filing penalties, to potential backup withholding. And that's my recommendation, to just stop if you're at a place where I just can't file a 1099 because I don't have the information. So again, you can go back and read all that guidance, and it'll kind of walk you through your responsibility as an employer and what the potential penalties could be. It's not to scare you. It's, again, I think overall it's fairly low risk, but we do want to take this stuff seriously as those charged with governance of a church, to make sure that we are handling our obligations and just try to get it right up front. So I've talked for a while. I'm going to stop, see if any questions have come in, or anything Josh, you or Kevin would like to add about what I just shared before we delve into the second topic.
Yeah, I can jump in with a couple questions. And by the way, for those of you that are hanging with us live, throw a question into the Q&A or raise your hand, and we'll let you ask that on the audio. But I've got a couple here. Kevin, did you want to jump in with anything before I mention these questions, or you want to?
Yeah, I can just kind of share how I view it from my perspective. We have a self-reporter tax system, which means the IRS is like, okay, we're not going to come bang on your door and collect taxes. But the thing is they don't necessarily trust us to report our incomes. That's why this stuff exists. Well, who do they burden with this? Well, they burden employers. That's why employees get W-2s. Well, there's a gap. What if it's a contract worker, right? They don't get W-2s. Well, that's where this 1099 reporting comes in. And so that's really what's happening, is that the IRS is depending on churches or organizations, businesses, to basically tell Big Brother what they're paying people, so that they can then compare that to people's individual tax returns to see if they're reporting all their income. From a church's standpoint, I think like what Chris shared, best practice, you have to attempt to get the W-9 if you can't. I've yet to come across any organization that has agreed to do backup withholding for folks they couldn't get W-9 forms from. And the reason why is because the amount of red tape you have to jump through to do backup withholding and all the reporting, it's just not worth it, right? Not to mention your contractor no longer will want to perform that service because they're only getting 76% of what you've agreed to pay them. The rest goes to the IRS. So because of that, the economics don't work out. It's more red tape for you. The best practice is just to sever that contract with that person. Really, If you think about it, the reason why they can't provide you a tax ID is either one, they're illegal, or two, they're like a conspiracy theorist who thinks that, they shouldn't be taxed or something like that. So there's probably some other issues going on there. And so certainly not anything you want to subject your church to or your ministry to.
That's good. That's helpful. So we got a question that just came in. I'll address Matt. Matt, your question first. It says, since I pay ChurchBiz for bookkeeping services, do I need a W-9 from y'all?
Yes. We are an S corp, so you don't have to send us a 1099, but we'll send you a W-9.
Yeah.
Good question.
So you're saying don't pay us though until we've given you that W-9, right? Yeah.
Good. It's good policy. Yeah.
Good question. Y'all keep the questions rolling. I got a couple here that were sent to me. How do we make sure not to include reimbursements or money spent towards materials versus services that were charged by an individual that we need to give a 1099 to? Any thoughts
Yeah.
there?
Yeah.
I'll take that one. That's a really good question. So you're correct. Reimbursements, not something that needs to be included on a 1099. There are certain vendors that you work with. So if someone's doing, let's say catering, for example, and there's a service element of their invoice to you, but then there's also like a food purchase. If you can discern between the two and you can reasonably set that up in your accounting system to just include the service piece and report on that, that's okay. However, it's also okay if you just report the entire amount. So there's no rule that says that a church, if we've got a contractor and we've paid them $15,000 throughout the year, and we've also reimbursed them $2,000 worth of expenses, so $17,000 total, there's nothing precluding the church from reporting the full $17,000, even though $2,000 are reimbursements. What happens there though is your contractor, when they go to do their personal return and they go into TurboTax and they plug in that 1099 and it says 17,000 of income, they would then need to take, if they truly were expense reimbursements, they could deduct that on their tax return. And so that it just nets out to 15,000. They only pay tax on 15. Really, the onus sits on them to do that. I've had that happen probably half a dozen times where I've issued a 1099. How they invoiced us we couldn't discern what was material or what was reimbursable. So naturally, I issued the 1099 for the full amount. Of course, the person kind of starts to cry come April, is around, April 10th. Hey, I need a corrected 1099 because, you gave it for the wrong amount. And so I'll just say, no, I'm not. And there's nothing that you didn't do anything wrong in terms of what you filed. It's just on them to be able to go and report it correctly on their taxes. And so, yeah, so to answer that question, you can help them out. If you can piece it out, that's great. And you can just report the service piece. But if you can't, reasonably, you can't do it, then just report the total gross amount.
That's helpful. Another question here. And Chris, you might have answered this a bit at the end of that last section, but what if I tried to get a W-9, but they don't provide one? I think you said, eventually probably would, maybe you don't work with that person, but any thoughts there on that?
Yeah. I mean, there's a by the book answer and there's the in practice answer. I mean, if you search that online, there's a ton of stuff out there. It's like, well, I mean, I have a hard time just saying like, oh, just go report it, like marking, oh, here's a 1099, but I don't have their number, because it's just like subjecting yourself to penalties. I don't know. I think that's just that in that situation, I think it's like if you don't have the information, you don't know report it, you just can't report it. On that, you just have to do your best to try and get that W-9 to be able to report that 1099 on time. And the best way you can fail safe against that is you just don't make that payment until you get that W-9, if you can have that policy in place. So that's why like the way that we try to help churches is to say, give a deadline each year, like we need W-9s by X date, or we can't file and report that. And so I think in practice, the best way to do that is if someone comes to the church and says, "Hey, I need my 1099 and it's March." It's like, well, you didn't provide us this information. You need to go report that. You need to make sure you report that income to the IRS, because I'm not going to subject the church to a late penalty because you didn't get us information on time. And then you get that information in the system so that you have it and you can file it timely next year. That's how I handle that, Kevin. I don't know if you defer for me on that, but that's, I don't know. I mean, that's kind of in practice how I've handled those situations.
Yeah, I think if they if in the example where you get the W-9 and it's already past the filing deadline, I would recommend that the church go ahead and file a 1099, even though it's late, and they will. They'll get penalized. But that just needs to be communicated to the people that are responsible for maintaining vendors and obtaining those W-9s for the purposes of filing 1099s. And then my position is if you can't get a W-9, I highly recommend you just do not contract with that individual going forward.
Yeah,
Yeah,
that's good. Yeah.
Okay, one last question, then I know we got to move on to the next section, Chris. So, and this is a good one because I've actually got some practical things I'm in my work I'm looking at right now. But so you mentioned that rent would be on the 1099 miscellaneous form, correct?
Mm-hmm. That's
And
correct.
so someone had a question of what about like a retreat center? If you go, you take youth to youth camp and you pay them for lodging, is that kind of, I mean, is that, or what would you do with that? Is that anything we need to be concerned about?
Like you're just paying to go do an event somewhere. I
Well, like
don't.
say you have to buy, hotel rooms, or you pay to stay at a campsite or something like that. Anything along those lines that you'd have to watch out for?
I'm typically. I don't think so. Is there anything I missed on that, Kevin? Like because you're not. I mean, you're not issuing a 1099 to a hotel. If you're going out to an event center, they're not providing you any kind of service. It's just it's basically like you're you're paying to go stay there. It's not a. Yeah, I
Yeah, I
don't think
think you
that's.
have to. It's more of a long-term contractual lease would be what the miscellaneous form is looking for on rents. Um, like a conference center or a camp that you would use for like a men's retreat or something like that, that wouldn't qualify. That would be more of a short term, like kind of like a hotel stay. That would fall outside the boundary of reporting like rents to an organization.
Yeah. Well, that's good. Well, hey, let's move. We're going to move into the last section, and we realize we're going to hit close to 8:30. So again, if you're an attendee and you have to get off, no problem. We're going to keep recording and keep going. We'll probably go past 8:30. So you're welcome to hang on. You're welcome to jump off. We'll have this video and audio for you after that. So with that, Chris, why don't you take
Yeah.
us into the next section?
Yeah, let me see if I can get through this a little quicker than the last one. But this next section is distinguishing between contractors, employees. It's important for a church to think about this when who's working for me, what kind of work are they doing, are they employee, are they a contractor? And so when you think about that, you just need to think about what governs that, what laws govern that. Contractor and employee regulations are governed through the Fair Labor and Standards Act. That's it's enforced by the U.S. Department of Labor, Wage and Hour Division. The Fair Labor Standards Act, FLSA, was actually passed all the way back in 1938. Of course, there's been revisions along the way. It was passed to protect workers, to ensure things like fair minimum wage, that non-exempt workers qualify for overtime. Employers can't take advantage of individuals that are doing work of employees, classify them as contractors. So the questions naturally, like, churches have a lot of natural exemptions like housing allowances, and they don't have to pay property tax. So does a church have to treat employees, do they have to abide by Fair Labor Standards Act? And the answer is yes, you do. You have to abide by these rules for how you treat your employees. All of the things I mentioned above, a church has to do that. If a non-exempt employee works more than 40 hours, you have to pay them overtime. When the Affordable Care Act was passed, if a church has more than 50 employees, they have to offer health care if they work more than 30 hours a week. A church has to pay and the employer portion of payroll taxes if it's not a minister that's exempt because of minister status. So point being, just think about, a church has to think about employees just like any other organization thinks about employees. Go to the next slide. We want to think about what is the distinction between an employee and a contractor. And again, this was pulled from Department of Labor website. Just kind of threw some quick bullet points. An employee, they're working for someone's business. They're going to be paid hourly salary or piecemeal, kind of a by the job rate. They're going to use the employer's material and equipment. They're going to work typically for one employer at a time. It's an ongoing relationship. The employer decides when and how work is done. The employer signs the work. Contractor is managing their own business. They're going to get paid when a project gets done. They have their own equipment. They can work with multiple clients if they choose to do that. It's usually a temporary relationship, project-based. They can set their own schedule, decide when and how they work, what work to do. That's typically some pretty key distinctions between an employee and a contractor. If you go to the next slide, just a really simple way that I would think about that, if someone would call and ask me, is this an employee or is it a contractor? I would just say, well, who's managing the work? And is that person managing other people? Those are really two key indicators of contractor versus employee. So if someone is directing their work regularly, they're not a contractor. That doesn't mean you can't set like deliverables, you can't set timelines, but I'm talking about like a manager that's regularly telling them what to do day in and day out, looking at a job description. And then if that person is also managing others in your organization, they're not a contractor, they're an employee. So you can't like skirt payroll taxes and benefits and all that and pay them as a contractor if they're actually a key stakeholder of your organization and working as such. So Josh and I had a podcast about this last year, and he gave me some examples I'll quickly go through. He's like, well, okay, so you contract someone to come mow the lawn at your church. Well, I said, well, if you truly contract someone from the outside and that's all they do is come mow the lawn, well, that's a contractor relationship. But if someone is your facilities manager and part of their job is to mow the church lawn, that's an employee. Summer intern in the missions department. Well, if that summer intern is part of like a summer-long internship that someone on your staff is managing that intern, they need to be a part-time employee. But if that's somebody that is coming to you from some outside missions group and they can just kind of come in and work on some projects kind of on their own and there's not really a lot of oversight, it might be a contractor, but it's probably a part-time employee if they're coming doing a summer internship with you. And then the other example he gave was, what if we use an agency, like our church uses an agency for childcare worker? That's a very clear contractor relationship. We are hiring them for a price, for a time to come watch kids on a Sunday morning. That's just an arm's length transaction, contractor relationship. So you can just kind of go through and think in your church of the areas and jobs that you have, and maybe there's some gray areas. You could reach out to us and ask a question. We could help you with that. Advantages and disadvantages. Working with contractors, it's easy to manage costs relative to workload. I used the example of graphic design. Maybe your church doesn't need a full-time or even a part-time graphic designer, but you got 4 sermon series this year and you can pay a very small cost to work with a contractor to get that work done, as one example. If you're working with contractors, you're not going to pay overtime, benefits, employer portion of payroll taxes. And it's even in at-will states like the state of Texas where we live and work, it is becoming more difficult to end employee relationships. And I use this example when Josh and I did the podcast. They're underneath the Equal Employment Opportunity Commission. There are now several classes of protected workers. One example is age is a protected class. I turned 40 a year and a half ago. I am now in a protected age group because there's a protected age class because I'm over the age of 40. So if I'm working for an employer and they terminate my employment relationship and hire someone under the age of 40, I could go and file a wrongful termination suit because say, well, you hired someone that's not in this protected class. I am in this protected class now, and now that they have to defend themselves, whether right or wrong, whether I was doing a good job or not. And it's just, there's just some headaches that can come along with some of those things wherever you fall on this spectrum of believing those things. I think a lot of the protections are good. It's just a fact that it is difficult to end employee relationships more than contractor relationships. On the flip side, disadvantage of working with contractors is a bunch of work comes in and you can't find somebody to do the work. It's difficult. It's harder to manage contractors than employees. And I think that bottom slide didn't get that one changed out. But also too, I think that when we're doing work of church ministry, what one put on that third slide is I think the ultimate goal is we would want to just have a team of people that are long-term invested in the work that we're doing. So we would want to hire people that could be part of our staff for a long time would be the ultimate goal. And with that, oftentimes smaller churches often have to hire more generalists or outsource to contractors. In the early days, maybe you can't even hire but one pastor, or then you hire a guy that does worship, media, and education to support a full-time salary. And then you kind of just start piecemealing things and growing as you can. But I've also seen the flip side where a large church that could hire a full-time graphic designer doesn't because they just really like this one contractor that they get to work with. So all that to say, however you go about your staffing needs, my recommendation is just be clear about what is contract work, be clear what is exempt work, like more managerial level, that doesn't qualify for any overtime pay. Be clear about your non-exempt work, your more kind of hourly based work or less managerial work that does qualify for overtime pay. Just be clear around all the expectations of the different roles that you have. And even within that, sometimes in church work, questions can come, well, is this part of my job or am I volunteering at the church to do this? Just being really clear about expectations, I think, is obviously always very, 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 very helpful. That just helps keep things from getting muddy and causing frustrations. And just the final encouragement, as you can see on those slides, is even tying it back to Scripture. Romans 13 talks about obeying the laws of the land as it comes to compliance and 1099s. We want to do what the government is telling us to do because that ultimately honors God. As long as the government's not telling us to commit sin, then we're going to obey the laws of the land as Christians. And biblical stewardship principles would say that we want to do everything we can to minimize risk for our churches, to minimize penalties we're going to pay, even when it comes to contractors and issuing 1099s. And our heart, the heart of ChurchBiz, is probably shared by those of you watching now or listening later, is that we want to administer to serve those doing the work of ministry. And getting this stuff right keeps churches from headaches that hinders the work of ministry. So like I said at the outset, stuff's not glamorous, but it does matter. So we're here to help and support you. Hopefully this content has been helpful, and I'll just stop there, open it back up for questions or any comments from Josh or Kevin.
Yeah, one comment I have on the whole contractor versus employee, unfortunately, that's kind of a messy topic because business owners have abused classifications with contractors, and it gets around who pays the payroll taxes, so the Social Security and Medicare. If you're a contractor, you get stuck paying that 15.3% tax. If you're an employee, you only have to pay half of it, and your employer pays the other half. And so there's initially an incentive to classify workers as contractors if you're an employer because it's cheaper. And so as you can see, like if you look at the IRS guidance, they don't give you like clear bright line tests. They're just kind of things to consider. But it's written in a way that it's completely in favor for the employee or the individual and not the employer. So churches do carry risk around this area because, for example, if you had let's say you did have a child care worker and you give them a 1099, they go plug in TurboTax and they see this big tax due. They come back to you and say, "Hey, I'm, paying all this tax. What's going on?" Um, Not that I think it's a huge risk, but all they have to do is file a single form complaint with the IRS and it launches an investigation, and they'll come in and look, and then they're most likely always, unless you can really document that they're a contractor, if you're ever in that position where someone files a complaint, you're most likely going to lose that from the church's standpoint. And then you just kind of get in a mess where you're having to pay back taxes and things like that. So that's really how I see the big risk when we talk on the topic of like contractors and employees, is just making sure that obviously you're not trying to classify someone just for the sake of, meeting a budget and trying to stick somebody with a tax liability. And then just make sure that if you are going to pay someone as a contractor, make sure they understand and know that. And I think that's a good way that you can navigate forward just to avoid that potential conflict.
Yep, that's good. It's good.
It's good. I think you answered. You already took the questions I gave you last year, and didn't have any pop up from our audience. So, man, that was really helpful. I think that I know I was helped as a practitioner in this by what you shared, Kevin, as well, and hopefully everyone watching this was benefited from that. And one quick announcement I'll say before we close, and Chris, I'll give you one more chance to say anything else if you have anything, or Kevin, if you have anything to add. But we're going to continue to develop training for finance teams throughout the year. We're hoping to do some more webinars. We're hoping to launch sometime later this spring our Finance Team 101 training. And really, our heart is to create biblically sound resources that will help train those of you that are working in the trenches, like Chris said, in churches, in nonprofits, around finances. There's not a lot of resources available for this stuff. And so what you guys shared tonight was extraordinarily helpful. And we want to continue to put out resources that can help churches take care of key things, not things we not the things we wake up for in the morning, right? Nobody wakes up to file 1099s, but they're very important, like you said, Chris. So anyways, thank you guys for sharing that, and thank you guys who were in attendance for being there, and hope anyone listening, feel free to share this. We'll post the full version and send that out to those of you that signed up. And we'll also have some clips that we pull, and maybe even a podcast we pull from this that we can pull from the audio. So any parting words from you, Chris or Kevin?
Matt had just put in the Q&A that just a thanks for tonight. Thank you, Matt, for being here and for questions and participating. Just, it's great to have you, and enjoyed this first go of doing a live format like this, and looking forward to the classes coming up.
Yep. Thanks everyone for all the work that you do.
All right. With that, we'll talk to you later.